Welcome to Hantec Financial Market Review. Today, we would like to talk about gold falls on hot US CPI, USD strengthens, USD/CHF rises on Fed caution. Gold prices dropped by more than 0.4% on Tuesday after the United States released hotter than expected inflation data, boosting the US dollar and reinforcing current Federal Reserve policy views. The June Consumer Price Index showed headline inflation rising to 7% year over year, keeping inflation well above the Fed's 2% target. This forced traders to lower expectations for aggressive Fed easing, with markets now pricing in less than 50 basis points of rate cuts in 2025. Despite trade tensions and tariff announcements by the U.S. president, gold fell as higher Treasury yields and U.S. dollar strength limited the metal's appeal. Attention now turns to upcoming producer price index, retail sales, and consumer sentiment reports. Meanwhile, in the currency market, USD/CHF climbed above the 0.8000 mark, reaching around 0.820 as the Federal Reserve's cautious stance and stronger U.S. inflation data supported the dollar. The latest inflation figures signaled stable but elevated inflation, reducing near-term chances of Fed rate cuts, with market expectations for a September cut falling toward 54%. Meanwhile, Switzerland's inflation remains below target with a subdued growth forecast, leading the Swiss National Bank to maintain an accommodative stance. The USD/CHF outlook reflects cautious optimism amid resilience in U.S. labor market data and evolving Fed policy signals. Summary: gold pressured by hot inflation and USD gains. USD/CHF rises as Fed easing expectations soften. Thank you for watching Hantec Financial Daily Market Review. See you next time.